Good morning, and welcome to the Deal Room Live, the daily real estate deal tank powered by Titan Impact Group, a global leader in AI-driven real estate investing and funding, where the real estate world meets speed, precision, and profit. And bring us your deal so we can put it into our AI model that analyzes and structures real estate deals in minutes, generates all the docs you need to get the deal done, and gives you a verified, unbiased breakdown of due diligence report. The investors get the advantage of getting fully vetted AI-analyzed deals that cut their due diligence time down by 60%. So you're in the right place. Let's open the deal room now and get into today's opportunity.
There you go.
All right. I got to put
Okay, and we're live here. We're live here.
We're live. We're live.
We need to flip.
live.
How do we flip
It's Saturday night. Who went and watched the homework? What are you doing?
trying to, so that people can see you?
Okay. Hi. Hi, everybody on TikTok. One freaking person. What's going on? If you have TikTok, go over to TikTok, find Catherine's page, log in, turn your phone all the way down, set it down so it looks like we got people in there.
Hang on. Tristan's in the attendee. So Katya, can you promote Tristan to panelist?
Yes, where do I go?
So, and if you have your participant window or participant list open, you should see panelists and attendees. So do you see that?
Yes.
Okay, so then you should see Tristan, the bunch of note takers, and then Tristan.
Yes.
So if you
hover
hover on his name, the three little dots, it'll say
Okay.
promote to panelist.
Okay, sounds good.
So that's part of the job of co-host is you got to just keep an eye on that attendees list. If people pop in
Okay.
randomly, you can promote them. And sometimes they'll decline. Like if you promote them, you'll get a pop-up that says Tristan declined to be promoted.
Okay.
Sometimes I'll just hit it again because sometimes it pops up and people don't expect it to pop up. So,
Okay.
you know, if somebody declines, give it a minute or two and do it again. And if they decline again, then just leave them.
Okay, sounds good.
So let's go ahead and get started here. So I wanted to actually start saying we are live from Club Scottsdale. And what I'm really excited about is we would love to have people actually start coming into actual Club Scottsdale and running deals live with us. And Tommy's got a bigger vision. So we're going to be working on that, which I'm really excited. So if anybody is ever in the area and wants to come down to Club Scottsdale, please do.
Yeah, if you're on TikTok, if you're over here on Facebook, TikTok, Facebook, anybody over there out there in the TikTok, Facebook land, like I got to talk to you guys a lot more because apparently you guys are what drive traffic. So if you're over here and we ain't paying attention to you, want our attention, you got to go to Zoom. You got to go from here, go over to the landsharkmastermind.com website, go to webinar, click on the Zoom link. Zoom link leads you to Katya, who is in charge of hitting the button to let your ass in. So that's how that works, okay? Follow the rules, dum-dums. All right, back over here.
Dum-dums.
They're dum-dums.
Dum-dum.
If you guys are over here, you're dum-dums.
If they show up.
People over here are dum-dums. You got to go over there and get out of the dum-dums and become a smarty. You ever seen the candy? You never seen the candy? The suckers are the dum-dums. The smarties are the things that the little... And
Canadians have the best Smarties on the planet.
Best
That's a
smarties.
whole other
I don't know. I
conversation.
like tart smarties, not chocolate squeak in your mouth.
I love chocolate Smarties. Okay, squirrel, here we go. So can everybody see the board? All the fun things.
I need to figure out how to make this TV go up more.
Yeah, yeah, we'll adjust it tomorrow.
And then what did you call this one? This was called fractional.
So we're about to add some commas to everybody's bank accounts. Anybody interested? Raise your hands if you're interested in more commas.
Commas are good. We like commas.
By the way, if you guys are interested, I have 3 properties in the chat. If you guys, they're warehouses. They're warehouses in Irvine. So if you guys are interested, I have those as an option.
Okay, so ready for this? Homework, Katya. You can't just come in and land dump on us. Be like, you should go look. People should be in trouble. Like you go around shoulding on people, like don't should on nobody. Never
Did
should
I
on
say
nobody.
should?
We should. No, Catherine did. She said we should go look at these properties.
Oh, okay.
In Irvine, right?
No, she did.
So
I didn't
she
say
did.
it.
Yeah. So here's
I
the thing.
did?
Ready? Hold on. Here's the thing. When we should on people, what we're doing is giving them all the work to fix their mental problem.
Okay.
Right? You have property, but you have no idea where to go with it, right? You're like, so here, we should go look at this, right?
Well, I discussed with Landshark previously, and it was a good fit.
What was a good fit? Come with it. Keep going. What was a good fit about it?
Well, it said that it could potentially be a Club Cali, such as Club Scottsdale.
Okay. All right. So
Or
now we're
it could
getting
be
somewhere.
a car storage facility. So I did my homework, Tommy.
Okay. And here, ready for this? What is the market analysis? What is the saturation rate? Because you didn't do all your homework because I haven't even given this to you yet. But what is our saturation rate of that market?
I would love to get
That's a
back
new
to
layer.
you tomorrow morning.
You didn't do the homework you didn't know to do? Wow. Gotcha.
Yeah.
Slacking.
Well, no. Hey, ready for this? She did. She kind of knew to do it, but I never told her to do it before because I did it for her the last time.
Yeah,
When
but
we looked
she's
at
bro-
the, when
but
we looked
she's
at
so
the
brilliant.
industrial
She
property,
figured it out on her own.
yeah, when we looked at the industrial property, I threw that in as a bonus. Was like, what's the saturation rate of multifamily where she's got this property? That's how we figured out to do the truck parking. So now, with this little bit added in there, she did everything except like paint the fence. Right, we got to paint the
Right.
fence, Mrs. Miyagi. Right.
Gotcha.
So and again, we can have great ideas about all kinds of things and say, oh my God, there's a potential to make $10 million here. When? 2050, 2080? Like we're in 2026. We need to make money between now and 2027.
Love it.
And so if the market's not there, what time does it show up? What do we do until then? Highest and best use. Right. I think you did the highest and best use, though. It sounds like it. So awesome. Let's go through. Do we have any guests coming in today?
So right now, who do we have on here? We've got so Blake, Laura, Katya, Tristan. That's who's all in the room right now.
Awesome.
And then people watching live.
So for those that are engaged with the summit is going to be, we're going to pick a new date for the summit at the next meeting tomorrow, right? Is that today or tomorrow?
It's today.
Today's Thursday, right?
Today's
so today
Thursday.
at 3:00 our time, rest of the world, whatever time they're on, we're going to be picking a new date for the summit and coming up with a new plan of attack for it so that we can get it done sometime between October and December of 2026. Okay. And then in that process, we're going to talk about something that we had come up about the fact that we're not going to have the event right now is because we're going to focus on this thing right here that you see, Titan 23. So, and then this is, what are we going to call fractional? What would that be?
It's our opportunity for non-accredited investors to become accredited.
General. Oh, so what do we want to call that?
We need to come up with a new name for that, you guys. So
For what?
normally,
I'll explain. I'll go into explanation on it. I'll put a question mark right here, and then because I want to finish building this out so everybody can look at it and be like, oh, that makes sense, right? Can you guys see purple if I do purple? All right, cool.
Yeah, the board's kind of blurry, but I think that's just the focus thing.
yeah, around it all.
If you take off blur background, Tommy, everything will be clear.
Tommy's
Okay,
not running it.
hold on. Let me.
No, it
try.
just got clear too. That was weird. I said it wasn't clear and then it got clear.
That's hilarious. Okay,
not
so
bad.
yeah, the blurred background is off.
It's not the blurred background because it's just the
million.
It'll focus in a second. But the purple, you can't read the purple at the moment.
25 million.
I wonder if we flip these lights on, if that helps. Oh, there we go.
Oh, there, it just went.
There.
Yeah. Whatever happened just went clear.
It's listening to us.
Yeah.
Good.
It's coming in and out of clear because the bottom's not clear. So I think just removing the blurred background option on Tommy's thing would be the solution.
Well, that's the thing. It's already removed. It's already off.
It's not
This
on.
is just happening automatically.
Interesting.
So we can share the screen and show you how we've already got it off and it's still doing it.
Yeah.
Right.
Yeah.
I can.
It's something with
no,
the
it doesn't
camera.
like
It's
that.
the way the camera is trying to focus or not.
Right.
It's what
Yeah,
it's trying to
gonna-
pick
it's
up
gonna
on.
Naturally, that's a built-in feature of the camera and Zoom. That's nothing.
Yeah,
to do
it's
with
what it's trying to, because now it's clear again.
it. Yeah,
so
if I
it's-
move a lot and I go into stripper mode, it'll be fine.
Please don't.
If one of you guys can send me the label on the back of that screen, I'll see if we can just get it so that it can share as a Zoom resource as a shared screen. So we don't
Here, hold on. Let me see if I can.
because this is what I was trying to get from that other screen that was upstairs, and we didn't hear back. They were waiting to hear the information from us.
Yeah, I like being down here better than upstairs for sure. See the rolls in the background, you guys, to the right?
Yeah, black one.
They're
All right.
gorgeous.
So this will help fix some
Okay.
people's problems. I might have
Love
to
this.
turn this a little bit because I can see like the glare is
There you
there,
go. You fixed it.
right?
Yep.
So
that's
there's a little
perfect.
bit of glare. If I stand in front of it, it goes away there a little bit.
fixed it.
The windows that are on the other side of us right here. So Titan 23 is a 506c Reg D company. We talked about it yesterday. 506c Reg D.
So quiz, what does that mean? Like, what does 506c Reg D mean? It means accredited investors only.
Only, right? But
Okay.
we can advertise for it. And so that's what we're going to be working on now. We've got a conference next week in Scottsdale called FactRight. We're going to be there for 3 days. We're working with a registered investment advisor, a Series 63, 65, who's going to be representing Titan 23. We're going to be talking to probably somewhere around $9 trillion worth of investors. Tristan, if you're around and you want to swing on by all means, we'll get
When
you
is
the door.
that?
It's called FactRight. I don't know the dates. Catherine's got the info, but if you wanted to swing by and pop in and look, come play the part of fancy partner, we can do that. So to break into this, what Titan 23 does is it invests into general real estate funds that create income for investors. And that income comes in 2 ways. One, they can invest into a debt fund. The debt fund has a guaranteed return of 8%, meaning that every month they're going to get 8% of their investment, no matter what, guaranteed under contract. Why? I'll explain in a minute.
Every month?
Say again?
Every month?
Every month.
8% a month. Okay.
Well, 8%
Annual.
Annual
Okay.
divided across 12 months, right?
Yeah. So 8% annual. That's
it
fine.
comes out to like 7.7% monthly. And just so people understand what that looks like, you can go get a 2-month CD over at Bank of America right now for 4%. So we're just doubling that, but we're guaranteeing it just like they do, right?
Okay.
So we're going to double what Bank of America will give you, and we're going to do the same thing in guaranteeing it. And the reason why is because I'll explain in a minute on the debt side. When we go over to the debt side, we're going to get investor money that we don't pay monthly, we pay quarterly. And when we pay quarterly, it's based on the percentage of the value that we're at that time, not like the amount of money they put in. Okay. And so if we're getting a return, which will probably be after 2 years, we would start then paying an annual, depending on how much we're making and valued at that point, between 12 and 22%. So that's where the debt side comes in, is that it covers us until we start cash flow. That's why we're able to guarantee 8%, is because in 2 years, we're going to be making 25 or 50. And I'll show you how. Right here in the Titan 23 playbook, we're going to have these 5 investments. We've got the Outback RV Resort, Sandman Holdings, the Septic King operation, our Bison Ranch, and then our fractional asset class. These are all different asset classes. The asset class is RV Resort. It's a luxury RV resort, 30 acres. It's going to be worth, we're raising 30 million, but the estimated value it's going to be is over 30 million. But we'll just say that it's 30 million. We're going to raise 30 million and get an opportunity zone to exit our investors. So this particular asset class, we raise 30 million, we'll get our opportunity zone exit. And if we have people that raise debt, we're not doing any of the debt on this, only because of the fact that we have to build it out. It needs investor money in order to start cash flowing. We wouldn't be able to take debt on it until after it's up and operational. But the fact what we're doing here, like once we sell all the houses there, that's $27 million right there. And then we still have this property is going to cash flow $2.5 million a year. So even after we get paid $27 million, the Outback RV Resort is still going to collect $2.5 million a year in income. And that's why we're exiting to an opportunity zone,
Nice.
right? So the investment to Outback, $30 million paid back within 3 years, because in 3 years it'll be stabilized. We'll have sold all the houses. We'll be able to pay back all of our investors and then some. And that investment is going to pay probably close to 22%. The next one is going to be Sandman Holdings. It's the asset class is the data center market. Like that is blowing up right now.
Yeah.
Like we get calls daily. Do you have data centers? Yes. They don't want to pay what we want right now.
Yeah, we've got,
Right.
So
They
many
want
cool
it. They want it for free, but they don't understand me. And so they're not going to have that. But what we're going to do is we're going to raise $50 million to get we've got, this is a round A too, by the way. This is where we're raising 20 million in debt, and we're going to raise 30 million in equity. And the reason why I split it up that way is because Sandman Holdings is already currently making $300,000 a month. And we can go ahead and take 20 million in debt and instantly turn that into another $300,000 a month.
Nice.
So we can reinvest that 20 million immediately into more equipment for the coastal crypto guys that will then just turn around and pay us, instead of 300,000 a month, 600,000. They're going to be paying us 1.5 million by the end of the year
Per month.
per month.
Nice.
Right. And so that's why 20 million is the debt fund. It's because I'm only giving them 8% on their money. You know how much money I'm making off their money? Close to 47%.
Nice.
Which means that what? I'm making 39% ROI for our investors over here on the $30 million side. When we raise that capital for $30 million, that's going to be redeployed into infrastructure, not new machines.
Right.
So, because I can't use debt on infrastructure, I got to use debt on shit that makes money, right? So that's the only way that works.
For itself.
Correct. So now I've got investors paying for our upgrade, which then turns around and turns us from a 1.5 a month to 3 million a month.
Nice.
Right. So now boom, boom, boom. And then we exit out to a REIT that we start. Like this will be our REIT. We start a whole new REIT that start at a $500 million REIT. We're going to buy that property for $500 million.
Right.
Right. Sandman Holdings will be worth $500 million in 24 months. Septic Tank. It's a manufacturing company. They make septic tanks, concrete septic tanks, and concrete blocks. There's a 40 to 80% markup on margin with that alone. Right? Just 40 to 80% to manufacture it and sell it. We're going to do it on Amazon. We've got a partnership with people on Amazon currently that are going to help us take these products. I've done it already on Facebook Marketplace, and I've mastered it in 7 states already. So Septic King is going to become a franchise in the septic tank industry.
Yeah.
You know, so, and it's kind of cool how it works out. The Amazon guys, like, we're going to sell, if you don't live on a septic tank, you have to put biopods into a septic tank so that it breaks down the solids and turns it into water out the back, right? Sherry Lynn ain't in here. She'd understand. But we're going to sell these pods on Amazon as a way to get people back to that's our top of funnel. It'll get us to our bottom of funnel where they're like, hey, my septic tank quit working because I didn't use these pods before. And now we can drop ship them a septic tank.
Nice.
Right. High ticket item too, by the way, $3,500 and up on each one. Right. And so if we're drop shipping 100 of those a day, I'll let you guys do the math. Anyway, that's going to exit to an opportunity zone exit or an ESOP. Okay. So an ESOP is what? Does anybody know what an ESOP is? Our new guys? Anybody?
Laura raised her hand.
Laura knows.
I did, but I don't.
So Blake and Katya, look up ESOP. That's homework. ESOP, right? Am I right?
Employee stock ownership plan.
Boom.
There you go.
There you go. It didn't take long. Blake, come on, man. Like, represent the Y gene, bro. Come on.
I already had to look up what an REIT is, but that's a real estate investment trust.
There you go.
Boom. So, and who buys those? Who buys real estate investment trusts?
He buys them or builds them?
Buys them, builds them, whatever.
It's the big guys.
Insurance company.
Yeah.
Your insurance company has a REIT. Why do they have a REIT? Because they have to make money off of the cash you send them, called your premium.
Yeah.
You're sending them money every month. They take that money, it goes in a bank account that they use to go and get property. And what they do is they make money on your money while it's over there in the premium column. When they got to pay for somebody that doesn't know what they're doing and driving, and they got to pay a settlement on something, they take the money out of the income that comes from the real estate they're invested in, right? So they're never losing money. They're always making money.
Right.
Crap tons of it. Anyway, now the fourth one is our Bison Ranch, our agricultural operation, $30 million. And again, opportunity zone exit. Now, the reason I'm not putting up there the returns, nothing, just remember, this is Landshark. This is like Landshark standard operating procedure. Nothing we do is under 20%. We'll never take on an 8% income producing anything. It just doesn't make sense. What are we going to do? We split everything 50-50 with people. So if it's only 8% return, it won't be on our portfolio because we do 50-50 splits. So in order for there to be an equitable split, it has to be over 20% because we want investors and operators making 10% minimum on their money, double what the bank pays you. Now you can say, well, what about the debt thing? That's 8%. That's guaranteed. Like, I can't guarantee 10%. I can guarantee 8%, but that's only because I've done the math and the numbers work. And we need that immediate injection of cash flow to go that direction, right? So, and then the last one, this is the one that I want people to get a little bit excited about, fractional. We need we want to call it something, right? So I'm going to explain what it is. It's a $10 million fund that is rotational. The money comes in and comes out on a regular basis. So let me show you why. We're going to take this, we're going to shrink it up and drop it over here somewhere. All right.
Katya, everybody in your group could actually participate in a fractional.
Right. We
Just
can,
so you know.
we can.
I'm
add
really
to it.
excited for you to present this, and I hope that you do.
We will.
Okay.
We'll fly out.
Okay.
So fractional, ready? We've got in our fractional is now, we had this coaching call yesterday with Alex, right? Is that his name?
Is it Alec? No, it was what was
Kyle.
his? Yeah, Kyle.
Kyle. So Kyle came in and told us about fractional where, like for example, remember the capital stack I showed everyone? You got to buy the land, you got to get the entitlements, you got to do the vertical, and then the finish work. And I kind of broke that five layer plate down.
Yeah.
Right. And so somewhere in there was an exit, and I said we could create what was called the entitlement fund. So here you go. Golden Globe Wholesalers is a company that is owned by one of our partners. And what Golden Globe Wholesalers does is he does entitlement work on property before it's developed, and then sells it to developers. Okay. So he buys it as raw land, gets it entitled, and then sells it to a developer. So this guy in that the whole Golden Globe Wholesalers, he's part of this $10 million thing. And so fractional is a lender's group or an investment group.
That's where you get to be the bank.
It's a
It's
group
Stella
of
Hahn's
investors,
company.
right? It's a group of investors. So that group of investors invests $10 million into this fractional. We got to figure out a name for, because Golden Globe Wholesalers needs money. They need, in order to do entitlements, we want to raise for them $2.5 million that they rotate in and out of that fund, because every time they do the entitlements, they sell the property, the money comes back in, and it's getting them 40 to 80% per deal.
And what
And
is
so
the
out of that
turnaround
40
time on that, Tommy?
Say again?
6 to 9 months for the entitlements?
Yeah. We're getting these done in 18 months, guaranteed. So again, I can get it done in 9 months, but it's way better to say, I'm gonna under promise and over deliver, right? And so it's very easy to do that when I know I can do it in 9 months, but let me call it 18 months and I look like a hero when it's done in 12, right?
Right.
So, and I didn't bust ass extra to get it done. I just did what I said I was going to do.
Right.
Right. Instead of trying to impress people with how great I am, I'll just impress them with how consistent I am. So, and I learned that as a nurse, because one of the things I hated as a nurse was hearing the ding, 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 the fucking call lights on the patient's room. Right. The reason why I hated hearing that was because when you walked in the room, you never knew if they were going to need a tissue or they were going to need CPR. So literally every time I walked in the room, my heart rate would just, as soon as I heard that bell, it was like, and then I'd have to run in there and see what was going on. They called me the bell Nazi, because nobody could touch their freaking call lights. I didn't take them away from people. That's bad nursing. They take the freaking call light away and hide it across the room so they can't get to it. Nurses do it. And if you're watching and you did it, you're a bitch nurse. So, and what I was the opposite. I made sure to go in the room every 10 minutes. I would annoy my patients. You need anything? And they called it 3 Ps. You got to pee? You need position? What do you need? You got to go, you need personal belongings? Like, we just did the Ps with them real quick. You're good? I'm going to come back and bug you in 10 more minutes. And they'd be like, stay out of here for the next hour. I want to sleep. Okay, cool. And every 10 minutes, I just go by and be like, and close the door, because they'd never touch their call like that. So anyway, moving on. Golden Globe Wholesalers is one of the 10 properties, partners that we're going to work with in this fractional thing. And the reason why I'm bringing this up is because fractional is going to set up its own deal. And Titan 23 is just going to invest into fractional. And then fractional is going to have multiple entities from within that. Okay. And one of those other entities is going to be Summit's Equity. Summit's Equity is going to take $2.5 million. They do Bitcoin and 0% credit cards. Why is 0% credit cards a thing? You're like, what do we care about 0% credit cards? Well, what can you do with a 0% credit card? Remember, we have the 5 C's of capital. We have cash, collateral, credit, contracts, and contacts. Out of your credit, you can take a 0% high value credit card, $50,000, and go and do a fix and flip, pay for all the materials with 0% interest. How much money did you save by doing
Get
that?
air miles.
And get air
And
miles.
get air miles.
So if you did $50,000 on a credit card, you paid 0% interest, then you paid $50,000 for material and didn't pay any interest on it. That's a construction loan with 0% interest, right? And so with a 0% credit card, now what you're doing is you're going to make more money, because when you do a construction loan, there's going to be holding costs on your construction loan, sometimes as high as 20%. So 20% of $50,000 is $10,000. Right?
And then when you make a profit, it's an infinite ROI.
Boom, goes against your ROI. So if you paid 0%, how about if you just paid us $5,000 to get you unlimited 0% credit card, right? So if you only do it once and you only do $150,000, but what if you did $100,000? Now you're only paying 5% of the $100,000 instead of 20, even if you did it once, right? So Summit's Equity helps people get that done for $5,000. They also sell Bitcoin. Again, rotating the money. They're not selling Bitcoin. They're selling Bitcoin mining machines. Let me rephrase that. They're going to spend $2.5 million on a Bitcoin miner that makes more money. The next one is going to be Exodus Capital. And this guy does EMD. We all know what EMD is, right? Does anybody have a question about what EMD is?
What's the answer, Katya?
Blake, hurry up.
Blake is on his way to work.
Blake's in the car.
I know.
Oh, the EMD, that's the earnest money deposit, guys.
There you go.
Good girl.
Right answer. Then we've got LMD Properties. Does anybody know who that is? BFF?
LDM.
LDM. Boy, I was trying to be cool. So Laura
Yes.
has LDM Properties, and they do affordable housing
I do.
and creative financing.
Oh, okay. I like that.
Oh, by the way,
Right.
what you're doing.
Oh, okay. That works.
But each one of these gets money from Titan 23 into the fractional, and then the fractional votes. Okay, the fractional is what's called the investment group. They vote on who's going to get what and how much. But as long as Titan 23 has put that $10 million in here, then like these can rotate through. Like let's say we did Golden Globe Wholesalers, we got them 2.5. They paid it back and they don't need any more because we got to deploy this into somebody else. So this could become Katya's deal, which, by the way, Katya, we got to talk with you about. We're going to get on the call with Dalen at some point, right?
Tomorrow at 2:30.
Today at 2:30, right?
Tomorrow 2:30.
Tomorrow at 2:30.
Yeah.
Because we got to raise $6 million for your deal. So, and we got to do it quick because there's a like that's one of the things we got to negotiate with Dalen. Is like we also. Like we want to go, we got to get our time with due diligence with this. I gotta be able to go to the county before I give anybody $4 million, right? So I want to make sure that when I go to the county, I can say, hey, we got this property. How fast can we get it rezoned?
I actually built a relationship with people within the county, so I have those connections that we
Perfect.
can.
We're gonna bust through that. I've got the connections too. They don't like me, they like you. So don't say you know me.
Okay.
Because they're human, they're fallible. So you gotta let them slide.
Katya, that's why you and I are on the team. People like us.
Yeah.
Right. So anyway, back to this list. This list is, and again, like the other one, what was the other one I had on there?
I had a big long list.
Exodus, Golden Globe, 1, 2, 3, 4. There was only 4 of them on there. Everybody's getting $2.5 million, right?
Excellent.
But that $2.5 million is rotational, meaning it goes out, comes right back in because of whatever deals we're doing. And here's the best part. This is the part I know you guys are going to love the most. The reason why we're able to be so confident about what we're doing. Landshark, the Landshark Mastermind has got all the people in it. It's the team, right? It's a team. It's an AI platform. I mean, because again, I'm not trying to toot my own horn, but we literally went in front of 3,700 people and talked about what we do with Deal Hunter, and ain't not one of them ever heard of what we do. They've got ideas.
And there we go. My favorite sound. Fun card.
Rolls leaving.
The luxury of working in a fucking auto mall.
In a garage. In a garage. You're like, we work in a garage full of exotic cars.
Can you all hear this?
No.
Oh, they don't hear anything.
I can't hear anything either.
I bet you if I pulled this up, they could hear it. Can you hear it now?
No.
Don't hear anything? Oh.
No.
Well, it's probably definitely sound, deafening, whatever.
Yeah.
That's
Okay,
all right.
well, it's
He's almost
loud
out.
here.
He's almost out. Anyway, so the Landshark Mastermind is the power behind Titan 23. It's what Titan 23 uses to validate and be able to do this and have the confidence that we can tell people we're going to give you a return, is because we have the team, we have the AI platform, and we have the SOPs, the systems and operational procedures, right? The systems and operational procedures to get these deals done isn't like we got to go hire some people to be the developers. We're developers in-house. So that's where that comes into play. We're using Deal Hunter by Landshark, something 3,700 people were like, oh my God, never seen anything like it. Not only that, but we're using Opportunity Zone Wizard, OZ Wizard, free estimates. Like free estimates literally did the guy's blueprints.
Yeah.
He was sitting there, he had his blueprints. We opened them up, I took pictures, ran it through free estimates, and handed him a price for what it was going to cost.
He almost fell off his chair.
Dirt work.
Dude, that's cool. That's awesome.
And so we'll see if that Joker shows up. His name is Robert. So if he's ever a panelist, like, you know, he'll tell you how great it was. And then finally, the systems and operational procedures goes back to what Catherine's been doing for years. And Laura and Catherine, how many K1s do you guys freaking send out a year?
A lot.
A lot.
You can't send a K1 unless people make money, right?
Yep.
Okay, so instead of telling people how much money they make, can you tell them how many K1s you send out?
Laura, I don't even know how many K1s we're up to right now. It's
I
a
don't
lot.
even know.
We literally 3 months in and we're still doing K1s, and we still have more for that many deals.
And people that don't know what a K1 is a disbursement letter. It says how much money they were sent in a bank, you know, from an investment to the investor, and they get a tax statement called the K1 statement.
And then it's part of their tax return.
And so they have to take those K1s in and say, "There's so much money I made for my investment this year, Uncle Sam." Right?
Take your piece.
And each investment, each investor. So we have so many investments and so many investors that it literally has taken 3 months to get this all done.
Yeah. And that's streamlining.
Yeah.
That's streamlining. This isn't that it isn't like, oh, we got, you know, 10 K1s to send out and people aren't got their shit together.
Yeah.
It's 10 K1s a day sometimes to make sure everybody gets their paychecks. Because again, the investors are big. So over here, does anybody have any questions, suggestions, or comments that they'd like to add into this?
So you were talking about wanting to change the name fractional. So where did fractional come from? I'm just playing names in my head. So why fractional? So then do we do a synonym of that, or?
So the fractional was the guy we talked to yesterday. That's his company. And what we're going to start is a Landshark investment group. And so here, I'll let me do this. Move that over. So Landshark, this group we're in right now, the Landshark Mastermind, can become an invest. This is what we're talking to Katya about, is that the Landshark Mastermind becomes an investment group by itself.
Okay, like he was talking about yesterday.
Right. And so inside the Landshark Mastermind, we're going to have investment vehicles for the EMD. Okay. That's what we were talking about yesterday. EMD, acquisitions, vertical, finish, and funding. Okay. So if Landshark Mastermind had a $10 million fund through fractional that we're able to raise capital through fractional from non-accredited investors. Yeah. Landshark Mastermind can be an accredited investor. Okay. And invest into Titan 23. Does that make sense? Yeah. Even though we have non-accredited investors invested into the Landshark fractional fund, Landshark Mastermind itself is an accredited investment entity. The entity itself is an investment vehicle, therefore it acts as an accredited investor. Yeah. Does that make sense? Yeah, funded by under the table, so to speak, funded by non-accredited investor. Yeah, it makes sense. Well, it's not under the table. It's disclosed because we've got the disclosure documents through a vestor. And so I've got to double check with some, and here's what I know. I still have 8 toes, right? I can walk with 8 toes. So I'm gonna put both feet across the line and see what gets chopped off. Right? Okay. If nothing gets chopped off. I mean, yeah, you just want to make sure it's all in compliance, because it can 100%. It can that goes back to the bringing on Tyler, bringing on
all
Brett
our
Siglin.
SEC.
We've got 3 lawyers that we paid deposits to that are
making this happen.
So when we say, can we do this? They go, let me check. You better you better check. That's what we paid you to do. If he immediately says no, he's fired.
Yeah.
If a lawyer immediately says no, that means they don't care. If they don't go back and look, they
You don't want them to say yes or no quickly.
I mean, exactly. I want them to look it up and a lawyer never says, yeah. I've never seen a lawyer say yes ever, actually.
Well, your job is to manage them.
Except
and your
for
job
just
is to
your
tell
address
them,
for
look,
a tech. They're like,
figure out how to get this done.
So that's their job.
Okay.
But yeah, the Landshark Mastermind is going to do this so that we can do all these things. $10 million fund helps do that. Now, what does that look like for Katya's group is that instead of it being Landshark Mastermind, it could be the, what school do you go to, Katya?
Fullerton.
Cal State Fullerton.
So Fullerton.
But the group is called Fortune Foundations.
Right. So you do the Fortune Foundations Club, right? Futures Foundation Club. And what we would do is we would help set it up. You guys promote it. Let's just say we raise $2 million for you guys to invest in real estate deals with us, right? And so from that, your club would then be self-supporting and you'd be able to afford hiring coaches and speakers to come out and do your meetings once a month. You could probably even buy your own building and rent it to yourselves through that, right? Like there's so many different things you can do with that.
We have plans for you, Katya. We're going to grow this thing out.
So that cute little building you're going to go do homework on later, like that might be your bucket right there, right? So, but that would be an example of that. And then once we establish that, we get to then Landshark Mastermind can go out and send up multiple chapters. I don't know how many clubs exist like this, but if this is just a one-off, great. But if you guys wanted to spread this out to other colleges,
I totally want to do this.
Totally do. Brendan would start one at Whitworth for sure. I mean, he'd go back and start one there.
Katya's like, wait, what?
I started 3 organizations at my college, 2 of which became national organizations. One's a state and one's a national organization.
Nice.
So, but I had to get the state to get the national, and it was called the Men in Nursing Organization.
Oh, wow.
Mino, MINO.
So we could work with Katya to literally take this to every college, state, and make it national.
Yeah.
Nice.
Yep. So, and how you do it is you just start at one school, get the proof of concept, take it to the rest.
Yeah.
And so if every chapter raises $2 million through that fractional business, right? Like that's what the point was, so that non-accredited investors become accredited. Because how do you become an accredited investor? Does anybody know?
I do.
I do.
Right. For an accredited
Julie,
investor.
I'm going to interrupt for a sec. I'm very close with the director of the Real Estate Association at Cal State Fullerton, and he has done sales, investments, everything. So I think that he might be very interested in getting the students involved through his association. So that could also be an option that I'll explore.
I love when the kids make homework for themselves. Katya, I know this person that I know this person that has to be contacted and needs a meeting set up between Catherine Bell and this person and Tommy D, so that Katya can become rich and famous with the Real Estate Association in Fullerton Beach, California, and then take this thing nationwide.
Fullerton Beach, California. There are no beaches in Fullerton.
But
anyway.
that place.
We understand.
The place I've never been before. I'm going to go tomorrow.
Okay.
The beaches in Fullerton are like the beaches in Arizona.
Rocky
Don't even
and
get
full of
him started.
Mexicans?
Rocky and full of Mexicans. Nice. Okay. Anyway, squirrel.
Yeah, there's no like. All
Okay, accredited investor.
Nope.
How do we become an accredited investor?
How do you become an accredited investor?
Stop.
First thing to being an accredited investor is you own $1 million in assets.
Not including your
private house.
Not your house.
Not including your personal residence. Sadly.
Your house don't mean
your net worth is $1 million.
Ready for this? Unless you lease the home you live in from the company that owns it, that you are the president of.
Oh, that's a good idea.
Okay, we'll squirrel into that.
Right.
So we'll just keep this simple for right now.
1 million in assets. What does this mean?
Or
cars, businesses,
real estate investments,
real estate, and
401k
investments,
gumball machines.
Meaning, like if you own 1 million in crypto fiat, you are an accredited investor. What you do now is you go and get a CPA on Fiverr to write you a letter and say, "Yep, you are." It costs $25. I'm not joking.
Really?
Go to Fiverr and you can get your accredited investor paperwork for $45.
Wow. Okay.
Number 2.
Learn something new every day.
250K a year or 350K if you're married. Net operating income, meaning that your W-2 job, what you make and you pay taxes on is this. The IRS has you on the books as a, this is married, this is single. When you're making 250K a year working at Xerox, you're an accredited investor.
Net or gross?
Net. Got to make that net. I don't think it's a gross number. I think it's a net number. What you claim on your taxes. So if you claim you make 250, I think that's where it's at. So what is that? I've never done this. I've never, like when I was a nurse,
I've never qualified that way either. So,
yeah. But I mean, I qualified that way, but as a nurse, I didn't care. Like I didn't pay attention to it because I've always been number 3, and number 3 is licensed.
How do y'all look it up?
So if you're licensed 65, 63, RIA, broker dealer, like any of the licenses. And then if you're advisor, you get that too. And as an advisor, I was CCIM. So, and I was certified investment manager, right? Commercial certified investment manager, certified commercial investment. So any advisorship, and this is why I'm pushing so hard for COSA, is because as a COSA advisor, you can become an accredited investor by becoming a certified opportunity zone advisor. Did you know that? I got to teach Catherine Bell something.
So a quick read. It's a SEC says net worth over $1 million, excluding primary residence, which we said, individually or with spouse or partner. Income over 200,000 individually or 300,000 with spouse or partner in each of the prior 2 years, and reasonably expects the same for the current year. So it just says income over. It doesn't say net or gross or whatever.
It doesn't say.
So you could, you could definitely.
So you had to have had that. You have to prove it the prior 2 years and expect it for the current year.
And they lowered it because I believe it used to be 250, but they are messing with the capital gains. They're actually trying to eliminate capital gains from real estate.
Nice. But then the Democrats are trying to like increase the amount that gets
on capital gains for if you sell your business.
Right.
Because we've got a tsunami of business sales coming up. So, and if you get a 50-year mortgage, when the hell are you going to sell your house?
Right.
Never. So anyway, what time we got? What time it is?
It is 9
until.
Okay, perfect. Let's run a deal. Because that's what people are.
Katya.
Yeah, Katya.
As a matter of fact, I already got a deal. You don't have me logged into it though, do you?
Yeah, I've got you logged in.
Okay, can you share the screen right there and we can pull up this house deal? I want to show everybody.
You want me to share the screen on there? On the monitor?
We can, yeah.
Okay, so hold on. Hold on, everyone. Drop in. Here we go.
It is on the home screen. I don't know why it's not pulling up though. It wasn't catching the signal earlier, so.
There you go.
There we go.
Just got to give a sec.
Nice
Who's that famous actor that Blake looks like right now?
Thomas Chalamet.
Okay.
Who went and watched the Landshark homework yesterday? The Saturday Night Live video Laura posted.
I did not. I posted it, but didn't watch it. I'll watch it today.
Okay. So Katya, are we running Katya's deal?
No, we were going to go, and I'm going to go look at the other one, this investment opportunity. Katya's got homework to do. Go to the investment opportunities right there, deal analysis. Investment deal evaluation. Yeah, let me see if that's the one. Keep going up, go up, go up, go up. Run it all the way up to the top real quick. So this was a wholesale deal I got sent. I'm putting money on it. It's what it is it's a mobile home on 1 acre of land there, asking 150. The ARV is 310, and that's actually for just another mobile home. They want to close fast though. They want to close tomorrow. I'm not going to close tomorrow. So they have to figure something else out.
Need work, sold as is.
Yeah. Well, and I went out and looked at the property, like the trailer's toast. The woman died in it 6 years ago. And it's been sitting vacant for 6 years. So it's toast. It's got to go. So what I did was I looked at it from a investment perspective. Scroll down. I'll show you what we came up with. Because I'm looking at it as a vacant lot instead of like a house, I don't care about the 3-bed, 2-bath and the ARVs out there. I just know that this is a mid-level market that I'm going to build a luxury house in. So let's scroll down and I'll show you what happened here as I went through it. Keep going. This is just the typical deal hunter stuff. We all know what that does. So now what I told it is I want to do a look around and see if we can pull some comps on bigger properties. So one of them was here. There's one that sold for $343,000. It's it's 1,400 square feet. Not a lot. One here. This is a mid-level, sold between 500 and 600, So that shows that the price per square foot is 220 to 300. Then a larger place sold for 700, 900. It had a shop and RV capability. And then we had a very high-end custom home built out there in the expansion zone, 3,500 square feet, sold for 1.15. But that's the ceiling. Like, you're not going to get any better than that, right? Out here, and if I built that same house out here in Scottsdale, I'd sell it for $1,500 a square foot, triple the money. I could get $5 million for the house, same house, and it's just because of the area.
Yeah.
So when we're looking at that, that's why I'm like, okay, well, do I really want to build a big ass like Scottsdale style house in the middle of Podunkville
Where nobody would buy.
Nobody's going to buy it anyway, right? So let's scroll down and see what Deal Hunter says to figure out. Deal Hunter says rerun your deal. Like, look at it from this way. If you
like
build
realistic exit.
right, it says realistic
Realistic.
exits right here. It says if you do it and build up and you built what you want to build there, you're going to lose money. So the best way to do this is go all the way to the top of the scale. It's still thin, but they're for the risk, but this is where it works. You got to literally get top of scale for it to work at top of scale. So if your only exit is the best case scenario, do you do it?
No.
No.
Right. So keep going down. Let's see. I was like, okay, well, damn it. I already said I was going to buy this thing. Now what am I going to do? Right. Because I know the 150,000 makes sense. The dirt makes sense. How can I make this thing make sense? So scroll through it, gives us final verdict down here. I said, here, go back up a little bit. I says, what about making it a parking shop for trucks? So it went through. It still thinks I want to do a house there because it's zoned residential, right? And so if you go through all the way down to the bottom, it shows that even as a business shop and doing it as a business shop, I rerun the deal here and it shows that now updated realistic with a truck shop there, I could get these numbers here, right? So that profit range then increases to 120 to 150 or 200 to 250, right? So how does that work? Keep going down. It shows right here that we do a hybrid spec buyer customization. We're building a custom home. Right, we're building a custom property. Keep going down. We're now in a position where we got a little bit better pitch, if you will. Truck, RV, lifestyle property, business use, residential, limited supply product because there's not a lot of them out there. And so what it tells us to do down here is take this action plan down here, confirm that we can do truck parking and shop structure, etc. Scroll all the way down. I said, you know what? What if I just want to do all just truck parking? Now what? Okay, here you go. Tells me that I can do 12 to 20 truck spaces, cost conversion, shows me I'm going to spend money out there to create that, the infrastructure. I buy it for 120, fix it for 120. Now what do I got? I got 240 into it. How much money can I make? 1,500 a month, 2,600 a month, or 4,000 a month. Now I know for a fact I can't fit 20 trucks on an acre. So that one doesn't even look right, but let's just pretend. Deal metrics tells me that my net operating income is $25,000, making on a $240,000 basis, I'm making a 10.5% cap rate. Is that strong or is that slow? Anybody know? Let's look at the next scenario. It says 16% cap rate. What happened? Went up, right? So higher number, better cap rate, better for the investor, the better the cap rate. Lower the cap rate, the higher the price. If you got like a 4 cap, 5 cap, you're going to spend a lot of money, not make a lot of money. If you got a high cap rate, you make a lot of money, not spend a lot of money. So here we go. The biggest risks are the zoning, the enforcement, and tenant capabilities. So at the end of the day, I'm looking at it. I could create an opportunity for about $150,000 in equity, but I'm going to run into risk from my neighbors bitching about me parking trucks on it. So, okay, now what do I do? So let's go all the way down to the bottom. And I said, hold on a minute. I said, I got some ideas. Keep going. I says, what about if I did, hold on right here. I asked it, I says, how many trucks can fit? It showed me only 8 to 12. So I'm at the low end, not making a lot of money. Keep going. I just wanted to point that out because I already knew that back of my head. So I said, check the zoning. It come back, told me it's R43, meaning that we can only build single family homes, manufactured homes. This is accessory structures, RV parking, agricultural use. Gray area are the small home-based businesses, right? And so what I can't do here, key distinctions, all that, great. Now I got an understanding. I said, now let's look at what we can really do. Go down, it says your real option. Rent quietly, keep tenant count low and minimize traffic, or get what's called a CUP, a conditional use permit. And then finally, it says the rezone heavy play is to get it rezoned commercial industrial, which is right across the street from an area that's going to be that. So I could go that route. right? Rezoning it keeps us closer to that value. Keep going, keep going. So now I said, hold on. I said, what if I added a casita to the first thing? It fits the build. It says, now this is a smart hybrid play. What am I doing? Go down because we got a little bit of time. Go all the way down. This is why I want to make this call 2 hours. Slope, back up, back up, back up. Right there. Generational housing development. What if I could make it to where I build a family compound? Show what it does now. And with a primary house and a guest house or a casita, this is what it looks like. I get 3 separate rentals. I could do pad split out there. I got a 2,200 square foot house, 3 to 4 beds. Casita's 1,000. Shopper garage, another. And then keep going, keep going, keep going, go down. The numbers are interesting here. Look what happens. Look what happens up here. So now my exit example shows that I'm able to get out of it for 1.1 to 1.4.
Nice.
1.2 to 1.4, right? And the profit range, even at my low end, is 150K, which was my best end on the other side of that park, right? So on the best scenario of the luxury freaking Scottsdale mansion, the best I could do is 150K. Now my lowest case scenario is 150K. That's why I'm like, oh, okay, look it. Now that makes sense.
Yeah.
Right. And out there in that area, it's a mid-tier area. People don't have the money to go put mom and dad into a nursing home. So they need a home in the back to put them in.
This
Right.
is powerful. So strategy, it talks about the luxury spec, the truck yard, the generational compound. So the risk here is high, medium, low to medium, upside, high, medium, high, speed, slow, fast, medium. That's
There you
really
go.
cool.
There you go. And so now here it shows you your watch outs. Make sure that the septic fits, right? Look at these things down here real quick.
Yeah. Must
We
handle
got to
2
worry about
units.
septic. We got to look at the utility split, the appraisal, all that overbuilding for the area. So we could do a 4-plex duplex there. We could put a 4-space duplex there and make that work if I wanted to. So that's something I would ask you to do next. Go ahead. As a matter of fact, pop it in there real quick. So you're going to hear me?
Yep.
Is it going to hear me? It ain't hearing me.
Listening.
Is it hearing me?
Yeah.
All right. I want to do a 4-plex on this property. Give me enough space to build 950 square feet per unit and no garage space. We'll build parking space into the back of the property where people can park under a cover. So this will be a quadplex that people are paying a standard rental rate for on this property. The quadplex will be a investment into like workforce, high quality housing out there, ready to go. And so while it's thinking about that, we're going to look at it tomorrow and wrap this up with a prayer. Heavenly Father, we thank everyone for coming in today. And we ask that you continue to bless and guide us so we can always do your will through your son's name. Amen.
Amen.
And so we'll see everybody tomorrow. Pray on an idea that we had. We are thinking about doing this podcast for 2 hours instead of 1 hour. And the reason is we want to add some breakout rooms to it and add some coaches to it so that the members get full value out of what we do every day. And so I feel like when we talk with Katya and Blake, it's important that people that have done this before are able to go into a breakout room and do some deals while Katya and Blake are learning how to do deals. And so having that break off is important. So, but we also feel like as a community, we can all grow together as well. And I think that like doing deals together is important because you guys can dive into it. And even the youngest ones in the group ask the best questions. So I appreciate Blake, Katya, and whoever else shows up, so, and Tristan. So everyone have a great day. We'll see everybody tomorrow.
Thank you, everyone. See you.
Okay. Bye.